In recent years, the American dream of homeownership, a cornerstone of the nation's identity and economic stability, has become increasingly elusive for many. Rising property prices, stagnant wages, and shifting economic policies have created a perfect storm, leaving countless individuals and families unable to afford homes. This seismic shift in the housing market not only affects the U.S. but also has global implications, influencing economic patterns worldwide. For Vietnamese citizens and the diaspora, understanding these changes is crucial as they can impact investment decisions and economic relations between the U.S. and Vietnam. As we delve deeper into this issue, we'll explore the factors contributing to the decline of the American housing dream, the stakeholders involved, and the broader economic and social impacts. Stay with us as we unravel the complexities of this pressing issue. The American housing market has long been seen as a barometer for economic health and prosperity. However, in recent decades, systemic changes have begun to erode this foundational pillar. As property values soar and income levels remain stagnant, the gap between the dream of homeownership and reality widens for many Americans. This phenomenon is not isolated. It reflects broader economic trends, including income inequality, urbanization, and demographic shifts. For those in Vietnam and other global markets, the implications are profound, affecting international trade, investment flows, and economic relations. In this video, we will explore how these dynamics are reshaping the American housing landscape and what it means for the future of homeownership. Join us as we examine the historical roots and future trajectories of this critical issue. The dream of homeownership has deep roots in American history, symbolizing stability, success, and a stake in the community. Post-World War II, policies such as the GI Bill significantly boosted homeownership rates, creating a prosperous middle class. However, the 2008 financial crisis marked a turning point. Housing market collapse, triggered by subprime mortgage lending and financial speculation, led to widespread foreclosures and economic turmoil. Recovery has been uneven, with urban areas rebounding while rural and low-income regions lag behind. These historical events set the stage for current market conditions, where affordability is the primary concern. As we trace these developments, we'll see how past policies and economic shifts have shaped today's housing challenges. The American housing market is shaped by various stakeholders, including government agencies, financial institutions, developers, and consumers. Government agencies such as the Federal Housing Administration and the Federal Reserve play crucial roles in setting policies that influence interest rates and mortgage availability. Financial institutions, including banks and mortgage lenders, determine lending standards and access to credit. Developers and builders influence supply through construction projects, while consumers drive demand based on economic conditions and personal aspirations. Each player has a vested interest in the market's direction, but competing priorities can lead to conflicts. For global audiences, including Vietnamese investors, understanding these dynamics helps in assessing investment opportunities and risks. Current housing market dynamics highlight a stark reality: supply is not meeting demand. Factors such as limited land availability, regulatory constraints, and labor shortages have restricted new construction. Simultaneously, demand has surged, driven by low interest rates and changing demographics, including millennials entering the home buying market. This imbalance has led to skyrocketing home prices and increased competition among buyers. For Vietnamese investors and the diaspora, these trends present both opportunities and challenges. High-demand areas may offer lucrative investment prospects, but the heightened competition and regulatory complexities require careful navigation. Understanding these dynamics is crucial for making informed decisions in a volatile market. Recent years have seen significant policy shifts that impact the housing market. Changes in zoning laws, tax incentives, and mortgage regulations have all played roles in shaping current market conditions. For instance, relaxed zoning laws in some regions aim to increase housing density, while changes in mortgage interest deductions affect affordability. Additionally, government-backed loans have been adjusted to support first-time buyers. These policy shifts reflect attempts to address housing shortages and affordability issues, but they also introduce complexities. For international observers, including those in Vietnam, understanding these policies is essential for evaluating the market environment and its potential pathways. The financial impact of the current housing market dynamics is profound. Increasing property values have led to higher mortgage payments, straining household budgets. As a result, many potential buyers are priced out of the market, reducing home ownership rates. For investors, this creates a competitive rental market with rising rents and lower vacancy rates, offering potentially lucrative returns. However, this also means that capital is increasingly concentrated among those who can afford it, exacerbating wealth inequality. For Vietnamese investors, these trends provide both opportunities in the rental sector and challenges in navigating a competitive market. Understanding these financial impacts is crucial for strategic investment decisions. The social consequences of the declining housing market are significant. As homeownership becomes less accessible, the fabric of communities is changing. Neighborhoods once characterized by stability and long-term residents are seeing increased turnover and a rise in transient populations. This erodes community ties and can lead to social fragmentation. In addition, the stress of unaffordable housing contributes to mental health issues and financial instability. For Vietnamese communities in the U.S., these changes may affect cultural cohesion and support networks. Understanding these social impacts is essential for policymakers and community leaders aiming to create inclusive, resilient communities. Understanding the motivations behind the current housing market trends is crucial for grasping the broader implications. Economic factors such as low interest rates and a strong job market encourage home buying. However, the fear of missing out on property appreciation and the desire to invest in stable assets also drive demand. On the supply side, developers are motivated by profit margins, which can be higher in luxury markets. This focus often neglects affordable housing needs, exacerbating the supply-demand gap. For global audiences, including those in Vietnam, these motivations highlight the complexities of the market and underscore the need for strategic planning in real estate investments. To gain a comprehensive understanding of the American housing market's trajectory, we turn to expert opinions. Analysts suggest that while current market conditions are challenging, they are not insurmountable. Some experts emphasize the need for policy interventions, like increased funding for affordable housing and reforms in zoning laws to stabilize the market. Others point to technological innovations in construction and real estate as potential solutions. For the Vietnamese audience, these insights offer a nuanced perspective on potential investment strategies and highlight areas of opportunity. As we consider these expert views, it's clear that the housing market's future will depend on adaptive strategies and collaborative efforts. In examining the decline of the American housing dream, it's crucial to consider a range of perspectives. Real estate professionals argue that rising home prices are a reflection of market demand and limited supply. However, economists highlight that wage stagnation and inflation are significant factors contributing to housing unaffordability. Social scientists point to the widening wealth gap, noting that homeownership is increasingly out of reach for young and minority families. Meanwhile, urban planners emphasize the need for smarter city designs to accommodate growing populations without exacerbating housing costs. Some activists advocate for stronger governmental intervention, such as rent control and affordable housing mandates, to ensure equitable access to housing. Each viewpoint provides valuable insights into the multifaceted nature of the housing crisis, emphasizing the need for comprehensive solutions that address economic, social, and policy dimensions. Understanding these diverse perspectives can help in crafting policies that are both inclusive and effective in restoring the American housing dream. When comparing housing markets globally, the American situation presents unique challenges. In countries like Germany and Switzerland, renting is more common than owning, partially due to strong tenant regulations and cultural preferences. These nations have stable rental markets with policies that favor long-term tenancy and prevent rapid rent increases. In contrast, the U.S. housing market is characterized by a strong cultural emphasis on home ownership, which has been historically seen as a path to wealth building. However, this perspective is being challenged by soaring property prices and stagnant wages. In contrast, nations like Japan have seen declining property prices due to demographic shifts, providing a different set of challenges and opportunities. The Canadian market, similar to the US, has experienced significant price inflations, prompting stricter mortgage regulations. By examining these global comparisons, we can glean important lessons about policy effectiveness, market stability, and cultural attitudes towards housing, providing a broader framework to evaluate domestic housing issues. A comprehensive review of housing policies reveals a complex matrix of local, state, and federal regulations that impact the housing market. At the federal level, policies such as the mortgage interest deduction incentivize homeownership, but have also been criticized for disproportionately benefiting higher-income households. State and local governments often have rent control measures intended to protect tenants, but these can sometimes lead to reduced investment in housing development. Zoning laws, often a local issue, significantly affect housing supply and affordability by restricting the types of housing that can be built. Recent initiatives, such as the Biden administration's proposal for increased affordable housing funding, aim to address these issues by promoting mixed-use developments and relaxing zoning restrictions. However, the effectiveness of these policies is frequently debated, as critics argue that without a holistic approach, piecemeal solutions may fail to address the systemic issues underlying the housing crisis. Understanding these policy dynamics is crucial for stakeholders at all levels. Current economic trends are shaping the housing market in profound ways. The post-pandemic era has witnessed a surge in remote work, altering where people choose to live. This shift has led to increased demand in suburban and rural areas, often resulting in price hikes as supply struggles to meet the new demand. Meanwhile, inflation rates have risen significantly, affecting construction costs and consequently housing prices. Interest rates, which have been historically low, are now gradually rising as the Federal Reserve seeks to control inflation, impacting mortgage affordability and housing demand. Additionally, labor shortages in the construction industry exacerbate these challenges, slowing down new housing projects and contributing to supply constraints. These economic factors intertwine, creating a complex landscape for both potential homeowners and policymakers. Recognizing and adapting to these trends is essential for stakeholders aiming to stabilize the housing market and ensure it remains accessible to a broad segment of the population. Analyzing the latest data provides crucial insights into the U.S. housing market's current state. According to the National Association of Realtors, the median home price in the U.S. has reached record highs, surpassing $400,000, reflecting a 15% increase over the past year. Simultaneously, housing inventory remains critically low, with available units not meeting demand, leading to bidding wars and further price escalations. The Zillow Home Value Index shows that certain metropolitan areas such as San Francisco and New York have experienced slower growth compared to fast-growing cities like Austin and Boise, which have seen price increases of over 30% year-on-year. Mortgage applications have declined as interest rates rise, indicating a potential cooling of the market, yet affordability remains a significant challenge. These data points highlight the uneven nature of the housing market recovery and underscore the importance of targeted policies to address these disparities and promote sustainable growth. The implications of the current housing market crisis are far-reaching and multifaceted. For individuals, the dream of homeownership is becoming increasingly elusive, particularly for first-time buyers who face steep down payments and high mortgage rates. This trend could lead to a generational shift where renting becomes the norm, impacting wealth accumulation and financial security. For the broader economy, high housing costs can lead to decreased consumer spending as households allocate a larger portion of their income to housing expenses. This can slow economic growth and exacerbate income inequality. In the long term, if left unaddressed, the housing crisis could contribute to social instability, as disparities in housing access reflect broader systemic inequities. Policymakers must consider these implications when crafting solutions, ensuring that policies not only address immediate issues but also promote long-term stability and equity in the housing market. The housing market's fluctuations have notable effects on the stock market, particularly concerning real estate investment trusts, REITs, and construction-related stocks. When housing prices soar, REITs, which invest in income-generating real estate, often see increased investor interest due to the potential for higher rental income. However, when interest rates rise, the cost of borrowing increases, potentially dampening a REIT performance. Construction companies face similar volatility. When housing demand is high, these stocks generally perform well, but rising material costs and labor shortages can negatively impact their profitability. Additionally, the housing market influences consumer confidence, which can affect broader market trends. If potential homeowners are deterred by high prices, this may reduce spending in other areas, leading to a ripple effect across various sectors. Investors closely monitor these dynamics, as housing market trends can provide early indicators of economic shifts, influencing broader investment strategies. Housing affordability remains a pressing issue, with the gap between home prices and income widening. The National Low-Income Housing Coalition reports that a full-time worker must earn at least $24.90 per hour to afford a modest two-bedroom rental, far above the federal minimum wage of $7.25. This disparity highlights the struggle many families face in securing affordable housing, particularly in high-cost urban areas where the demand far exceeds supply. The affordability crisis is exacerbated by rising utility costs and property taxes, further straining household budgets. In response, some states have implemented or are considering measures such as rent control, housing vouchers, and subsidies to support low-income renters. However, these solutions face opposition from landlords and developers who argue they discourage investment and reduce housing availability. Addressing the affordability crisis requires a balanced approach that considers the needs of both tenants and property owners, aiming for solutions that are sustainable and equitable. Experts predict that the U.S. housing market will continue to face challenges in the coming years, largely driven by economic uncertainties and demographic shifts. According to housing economists, while price growth may slow, significant declines aren't expected unless there is a major economic downturn. The expectation is that interest rates will continue to rise, making mortgages less affordable and potentially cooling demand. Demographically, the aging population might lead to increased availability of homes as older homeowners downsize, but this could be offset by continued high demand from millennials entering the housing market. Additionally, urbanization trends may shift as remote work becomes a permanent fixture, influencing where people choose to live. Experts also warn of potential disruptions from climate change, which could affect housing supply in vulnerable regions. These forecasts highlight the need for adaptive strategies that address both immediate market fluctuations and long-term demographic and environmental changes. Investment trends in the U.S. housing market are shifting as traditional strategies adapt to new market realities. Institutional investors are increasingly entering the residential market, buying single-family homes to rent out, a trend driven by the rising demand for rental properties. This influx of investment can tighten the supply of homes available for purchase by individuals, further driving up prices. Meanwhile, real estate crowdfunding platforms have gained popularity, allowing smaller investors to participate in the market without needing significant capital. This democratization of real estate investment is changing how capital is distributed across the sector. However, there are concerns about market volatility and the potential for these platforms to over-leverage investments. As these trends evolve, investors are advised to remain vigilant and consider the broader economic indicators and regulatory changes that could impact their portfolios. Understanding these dynamics is crucial for navigating the complexities of modern real estate investment. Across the United States, housing affordability is evolving differently, reflecting varied regional economic conditions. In coastal cities like San Francisco and New York, high demand and limited supply have led to exorbitant home prices, pushing many potential buyers to the suburbs or more affordable cities. Meanwhile, in the Midwest, where economic growth is slower, home prices remain relatively stable, yet income levels also lag, maintaining a barrier to entry for many. The Sun Belt is experiencing a housing boom, with cities like Austin and Phoenix seeing rapid price increases due to population influx. This regional disparity is exacerbated by local policies, zoning laws, and the availability of land, which significantly influence housing markets. Understanding these regional dynamics is crucial for policymakers and potential homeowners alike. Local governments must balance growth with affordability to prevent exacerbating economic inequalities. For Vietnamese Americans, these regional differences may influence decisions on where to settle, invest, or even return to Vietnam, where the cost of living may be more manageable. In Vietnam, where the property market is also experiencing significant changes, the implications of the American housing crisis are felt in nuanced ways. Vietnamese American communities might face challenges in securing affordable housing in the U.S., leading to increased interest in investing or returning to Vietnam, where real estate is becoming a lucrative option. The Vietnamese government has been encouraging foreign investment in real estate, offering attractive incentives to overseas Vietnamese. However, rising property prices in Hanoi and Ho Chi Minh City pose challenges similar to those in the U.S., with young families struggling to afford their first homes. For Vietnam, the demand from overseas Vietnamese could further strain local housing markets, potentially leading to increased prices and competition. As more Vietnamese Americans consider Vietnam a viable option for investment and living, understanding these dynamics becomes crucial for both personal and national economic strategies. The issues facing the American housing market are not unique. Across the globe, countries are grappling with similar challenges, though to varying degrees. In Canada, cities like Toronto and Vancouver have experienced rapid price increases, driven by demand from both domestic buyers and foreign investors. The UK faces its own housing crisis, with London housing prices soaring beyond the reach of many citizens. In contrast, Japan's housing market has seen stagnation, with more supply than demand due to a shrinking population. These international comparisons highlight differing economic policies and cultural attitudes towards home ownership. For instance, Germany's strong rental market offers a viable alternative to buying, easing some housing pressures. Understanding these global perspectives can offer valuable lessons for the U.S. and Vietnam, especially in crafting policies that balance growth, affordability, and sustainability. Recognizing these patterns can help anticipate shifts in the housing market and guide both domestic and international strategies. Looking to the future, the American housing market faces several possible scenarios. One potential outcome is a gradual correction in home prices as supply chains recover post-pandemic and interest rates stabilize. However, if inflation continues to rise, it may lead to prolonged affordability issues, exacerbating socioeconomic divides. Another scenario involves increased government intervention, such as expanded affordable housing initiatives or tax incentives for first-time homebuyers, which could alleviate some pressures. Technological advancements like modular housing and 3D printing might also revolutionize construction, reducing costs and increasing accessibility. On a broader scale, the shift towards remote work could permanently alter housing demand, with more people opting for suburban or rural living. For Vietnam, these scenarios underscore the importance of adaptive strategies in both domestic and international contexts, as changes in the U.S. market could influence global trends and opportunities for Vietnamese investors and policymakers. The housing market's evolution presents both risks and opportunities. One significant risk is the potential for an economic downturn if housing prices remain inflated and unaffordable, leading to a decrease in consumer spending and broader financial instability. Conversely, opportunities lie in innovation and policy reform. Implementing smart housing solutions and sustainable construction practices could reduce costs and environmental impact, appealing to a new generation of homebuyers. Additionally, the rise of co-living and co-ownership models presents alternative pathways to traditional homeownership. For Vietnam and other emerging markets, these shifts in the U.S. could serve as a blueprint for sustainable urban development and housing policy reforms. Embracing these changes could mitigate risks while capitalizing on new opportunities, benefiting both local economies and the global market. Investors and policymakers need to remain agile, ready to adapt to these evolving conditions to ensure economic resilience and growth. As we dissect the current state of the American housing market, several key takeaways emerge. First, regional disparities highlight the importance of localized policy solutions tailored to specific economic conditions. Second, global comparisons reveal that while the U.S. faces unique challenges, similar issues are prevalent worldwide, offering opportunities for shared learning and collaboration. Third, future scenarios underscore the need for adaptable strategies that can withstand economic fluctuations and embrace technological advancements. Fourth, the balance of risks and opportunities suggests that innovation and sustainable practices will be crucial in shaping the future of housing. Finally, for Vietnam and other emerging markets, these insights can guide policy reforms and investment strategies, ensuring that growth is inclusive and sustainable. Understanding these dynamics is essential for anyone looking to navigate the complex landscape of housing markets in the 21st century. We invite our viewers to delve deeper into the complexities of the housing market by engaging with us. Share your thoughts and experiences in the comments below. How has the housing situation affected you personally or professionally? Are there particular strategies or solutions you believe could address these challenges effectively? Your insights could provide valuable perspectives and foster a vibrant discussion. Don't forget to subscribe to our channel for more in-depth analyses and updates on global economic and political developments. By staying informed and involved, we can collectively navigate these challenges and contribute to meaningful changes in our communities and beyond. In conclusion, the American housing market is at a critical juncture. The challenges it faces are complex, with far-reaching implications for both domestic and global economies. By examining these issues through multiple lenses, regional, international, and future-oriented, we gain a clearer understanding of the paths forward. For Vietnam, these lessons are particularly important as the country navigates its own housing dynamics amid rapid urbanization and economic growth. As we conclude, we encourage you to remain engaged and informed. Together, we can advocate for policies and practices that promote sustainable, equitable housing solutions. Thank you for joining us today, and we look forward to exploring more critical topics with you in the future.